following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling, prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You can have many great ideas in your head, but without action upon an idea, there'd be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials up 42, NASDAQ down 8, S&P's flat, monster volatility out here. Pretty cool, folks. Gold contract, monster bid, up 21 bucks, 1333.40. Monster volume, wide price spread, got it all. Let's go take a look. We're going to start right there. What do you have? Gold out here today, you had a low out here of a 1309. Right now you're at 1333. You've done 421,000 contracts. That's a monster, folks. Bottom line, gold's making its way up to the 1370. Good move here. Real good move. Silver, we go take a look at the silver market. Same type of setup inside the silver market. Silver market right now is up 2.6%. You're up 43 cents. Silver, also, wide price spread, 100,000 contracts. This baby's going topside. Now, the intriguing thing here, which is pretty amazing, actually, is this, is that the notes and bonds, so the Fed comes out, this 25 basis point hike, we're all figuring that. But inside of this statement, folks, so the bottom line is that they think the economy basically is doing great, on fire, actually, on the way up. And this is the kicker here, that they think by 2020, okay, we're 2018 now, that inflation really is going to be kicking in a big way. Now, that being said, the market is looking at 2020 and saying, well, you know what, that's a long way off, and we don't think you're going to raise rates as many times as you may think you're going to raise rates. Because the 10-year hasn't moved. It got down to 119, rejected it. You've done 1.2 million contracts. You're going into, it's a monster. We're going into like 2.4 million. Bottom line, this bond market wants higher price, lower yield. King dollar is saying it all also. King dollar is going downtown, has the volume going downtown. We've done 30,000 contracts. You're down 624 ticks. You're at 89,330. Bottom line, yesterday, I believe we went up on 16,000. This is just a confirmation that where this thing wants to go. Yeah, we did 18,000 contracts on the way up yesterday. You're going down with 30 today. That's going to set up lows, the swing low of February 16th to go get tested. That swing low is 87.830. Big numbers. S&P, if we take a look at the S&P, what I expect you're going to have out here when all said and done is a flat market. You are building cars for lower price, and in fact, the way that the SPY is setting up, it looks like it's setting up for the ABC structure on the way down. We've got as high as 273.27 today. Right now, you're at 271.33. I think the volatility is going to continue into the marketplace, but the way all these indices are setting up, they almost look like they're going to be an a B to C of an ABC structure on the way down. You got the Dow Industrials was as high as 24,977. Bottom line is you're off 200 points from that high. Right now you're up 54. We were up 254. Gave it up in spades. If we go over and we take a look at the volume characteristic, and of course we got another hour, bottom line it's going to be light volume. If you're at 457, that'll check in probably at about 750, 800. On the composite, you're at 1.4 billion, so that'll come in about 1.5 billion. Bottom line, pretty wild market out here. No two ways about that. We go take a look at some of the higher. Well, let's go to the GDX. Okay, go to some of the gold stocks right now. GDX also has the move with volume. GDX right now up 62 cents, trading at $21.90. Wide price spread, has the volume behind the move. This thing is going to go look at 23.15. Now, what's going to be interesting with the GDX is this. The GDX coming into the close gets big volume. Thus far, we've already got monster volume. We have 35 million right now, and bottom line is that you're coming into like 53. This thing will push more than 53. We get 50 minutes left in trading. After 50 minutes left in trading, your last 5 minutes, that's when the volume comes into that GDX in a big way. XAU, we take a look at the XAU out here. Let's see what we have here. So the XAU right now, trading up at $2.43. You're at 80.56. And the big one here, folks, that we have been worried about for quite some time is the Gold Bugs Index, 172.87. This still has to get back inside 174.19. Bottom line, we'll see whether it can do it today. It's got some juice, but guess what? You want it back inside that area if you're a bull. The reason being is that is the larger trading range. That's how this is setting up. We go take a look at the euro. So, of course, the other correlation of the dollar index going down, euro going up. Right now we're at 123.33. That baby looks like it's going to start making its way up to the 125.25 level, and we'll see how it handles the top of that consolidation. That's the top of the consolidation that we have out here. Some of the other commodities, let's go take a look at some of the other commodities out here. You have, oh, look at that. So let's go over to the oil market. Oil got a big bid. Oil, first off, the crude market is up 2.8%, $65.32. When we're taking a look at that market, what you're looking at is that you have 703,000 contracts. That market is making its way up to the 66.02 level. 66.02 is the high of January 25th. So bottom line is that oil, even with the aspect, if we go to the XLE, this still hasn't been able to get traction. You're up $2 today, which is great, no doubt about that. Bottom line, though, is that you are coming into the downdraft from February 5th, 12 million shares versus 34 million at this particular point. So that market is going to need a lot more juice in order to basically sustain higher price in the future. Right now, Dow Industrials up 106, NASDAQ up 10, S&P's up 6.5. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 95. You get the Nasdaq up 5. S&Ps are up 4.5. So Powell just finished his press conference, folks. Bottom line, let's see. He thinks equity and commercial real estate prices are elevated. He's looking for, spot gold. Bottom line, this is the biggest move in 5 weeks, biggest gain in 5 weeks. A big number, no doubt about that. He thinks the tax bill should encourage more productivity. He's looking, let's see, he's carefully considering, so he's looking that he may be doing more press briefings also. Now, this one was 45 minutes. I think that's probably normal. The rate of interest, he thinks, is still quite low. Market-wise, the way these bonds are trading, right now, the 10-year note, folks, is down 1 tick. So the way that the market is looking at this, he might be saying that, yes, the bottom line is that it's low, but guess what? The market's saying it's going to stay low for quite a bit of time here. He's surprised that the wages haven't gone up. He thinks the gains are moderate, and that is surprising. That's been surprising for a long period of time. I guess one of the encouraging things that the market is looking at, and gold in particular, and silver looking at in particular, he was quoted as the Fed is taking the middle ground on rates. So that came at the end of the press conference here when they were asking him a lot of questions. Job market remains strong. Bottom line, let's see what the market actually is pricing for the next WIRP. So, okay, so what happened here? You have one meeting. The next meeting is in May. Right now, that is only pricing out at a 27% chance that we get another 25 basis point. June is at 59%. So, I suspect maybe by tomorrow morning, those when we bring that up, folks, those change very rapidly. The aspect of the probability odds, the Fed fund future probability odds of rates either going up are going down. And in this particular case, the probability, of course, has been going up for quite some time now. Let's go take a look at the Facebook. So Facebook got a bounce out here today. Facebook has been down big. And what you have here, we got to a high of 173. Right now, you're at 169. Now, what you're going to have with Facebook is this. This is pretty intense, and this is what it is. We came down 2 days, monster volume. You came down on the weekly, and you blew away this swing point. The swing point that we're talking about is the week of February 9th, 167.18 is the number, 176,000 shares, million shares traded in the week. Well, we're already at 310 million. So bottom line is that you took that out. That is saying that this is going to build more cause to get down and into the price area where it broke out from, which is the 151 area. It's going to be intriguing watching that, because if, in fact, we do continue not only down to that point, but you get volume on that move down, then that opens up dramatically lower price inside of Facebook. Let's go take a look at the ABX, a few more of these gold stocks. You have ABX right now. That's up 38 cents. You do have volume behind the move right now. Yeah, this is going to be a small ABC up. This is pretty cool. Your A point is 11, your B is at 1240. So let's look at a few more of them, because that says that we may have a lot of ABC structures on the way up. Yeah, we're gonna. This is pretty cool. So because we had consolidated, we're going to sideways move. An Eagle, same deal, taking a B point out, taking it out with volume. They're small ABC structures, but what does happen is that once you get ABCs moving, whether it's up or down, inside a sector, you can be really surprised how many more you can actually start firing off. If we go take a look at Franco, Nevada, that's amazing. That's up $1.11, but that needs more juice. Royal Gold, which has been one of the better leaders inside the royalty stocks. This here, 84.40. That's not going to have enough volume to be an ABC up. Let's go back to the GDX, though. The GDX maybe, no, GDX isn't going to either. What the GDX did do, which is really cool, you know, when we broke topside on February 14th, that had the wide price spread, had the volume. That's where we're going. That's 23.15. Right now, you're at 21.91. So we are going to have some big action inside that metals market after a long consolidation. That's the bottom line. This thing has been in a long consolidation. What I expect you're going to see is that we are going to go after the highs. So let me put this back up again, because the last two times that we got up here inside the gold market, we did not take this large consolidation out. And it's been a consolidation, and it's been out here for quite some time. So the number that we're looking at is 1350. No, here it is, right here. Yeah, the first high was 1365. That was in January. Trying to take out the 1358. These are different contract months. That's why it looks looking a little bit different. But that's the number that we've been trying to take out. Went back up there the week of February 16th. Went to 1361. Gave it up. We got all the way back down to 1303. We tested the 1306 yesterday. You're going back topside, and the real key is going to be, can we take that out? Because if we get taken that out, you know, then you're at the 1377, but it gets heavier than that. And what happens here is that this consolidation has been in place going all the way back to May of 2013. You know, so this 1377 is a monster number, because if you do take it out, then you have game on that we haven't had game on in years. I mean in years, too, because the big move that was we had January of 2016 going all the way to June. That was a beautiful move. This one actually looks like it can be bigger than that, because if you do take that out, there's nothing much stopping gold to get up to that the $1,600 area, 1602 to be exact. So there's big action out there right across the whole gold market. We'll go take a look at the yen. Let's go look at the yen, because the yen is going to dictate if that keeps getting stronger, which is down 43 ticks right now, 106.10. that is saying, if we take a look at this looks like it wants to go down to the $100 mark. If you get that $100 mark, yeah, it's actually 99. You get that 99 mark inside the yen. As the yen gets stronger, gold gets stronger. So remember, when the yen goes down, what that is dictating is that is, bottom line, getting much stronger than the U.S. dollar. As that gets stronger than the U.S. dollar, gold, silver, they go topside, and they go topside in a big way. We take a look at some of the other commodities out here. You got gasoline's up 3.2%, crude's up 2.8%, silver's up 2.6%, gold's up 1.6%, copper's up 1.6%, sugar's up 0.8%. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. We have the Dow Industrials right now up 72. NASDAQ is flat. S&Ps are up 2. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 49. NASDAQ's down 6. S&Ps are off 1. Let's go to Gyro in California. Hey, Gyro, what's going on? How you doing?
Good, good. Thank you so much. I need your opinion, your professional opinion regarding Schwab. You think it will go up to that 58.11, the high of the March 13th from here?
Let's take a look. So you get SCHW. This is Schwab, the big broker-dealer. Lows 37, the highs 58.11. So Yeah, I don't. You know, what you have here is that your first high out here, January 17th, 56.25. You're up there, you had 8 million shares traded. You go downtown that February 9th with 12 million. You go back up with 6 million. And then this is the kicker here. See how we come off that high? How we come off that high, Garo, is that you come off the high with 9.8 million shares. That was on the 14th. You know, yesterday you did 5.4 million. Today you're only at 4.1. It's like, okay, that thing wants to consolidate down the bottom, I think, before it wants to go up to the top. And that key there is how it came off that high. You made the high with 6 million. You came off it with 7. You came off it with 5. You came off it with 8. And you're going up today on 4. So that.
How low it can go? Can go to 54.81?
48.04. Where I'm going to the February 9th high volume swing low.
I see. I appreciate it so much. Thank you, sir, for your time.
Have a great one. Have a safe one. Appreciate it. Market-wise out here, this baby, there she is. We haven't had volatility like this in quite some time. When all's said and done out here, looks to me like, let's take a look at the SPY, that you're going to just have a flat market. Yeah, and so the way the SPY is set up, now this is going to be really cool, because the way this is set up is that, you know, you have an A point out here of 280.41. The B's would be the low of Monday. And this looks like it's setting up a nice B to C of an ABC down. You've only done 62 million shares thus far. We did 109 on the way down. They'll put volume into this at the close, but that is not going to be. We're not going to put 40 million shares into the SPY. The NDX 100, same type of setup. You know, we came down with 71 million. Right now, you're at 36. That'll probably do a good 46 million. That's still not. Well, that's not enough. That would be still a B to C if, in fact, we stay down. I expect we're going to stay down. And both of those, let's see how that one, 175.21. So you get approximately, so you get $6. That would get you down to the C is 168. So 162. Oh, this is a nice setup. See, 162 price projection would get you just below the March 2nd, or let's say at the March 2nd high volume swing low. And that's how these things normally set up, by the way. You know, many times what you see is that when you do a price projection, they'll come down to the lower swing point, or if you're doing one on the way up, they go up to the higher swing point, and then they do something other than that. They have to build some more cars in order to get to higher price. This gold move is a trip, man. So let's go over to gold again for a second. You'll see intraday. This thing's not stopping. So intraday, we put this baby up. You're going to see it's a classic. You know, you had the first moves. We had the first moves actually right this morning. Nice move, 920. That was the first wide price spread. We went from 1325 to 1328. Had 1,200 contracts behind the move. You pull back down with 269 contracts. So that is about as good as you can get. Meaning, you know, you broke top side to 1329. You go back down to 1324 with 269. You charge ahead again, 891 contracts. You pull back down, and that one we pulled back down with 863. That was at 1320. At 2 o'clock, that thing basically first went down to the 1325 level, then took off like a rocket ship to 1333. Good volume, and thus far, you know, the volume is going to stick out like a sore thumb today. We're at GCJ. 1 second, I got it. Yeah, we're at 437,000 contracts now inside the gold market. And that baby, it's pretty cool because, so check this out. On the 14th, which, well, that was the sign of strength that we were looking for, you know, basically to get back up to that level, you did 432,000. So you can see that you not only have the volume, we have the price move again, but you even have heavier volume than we were laid out there on the 14th. So it's a big number. There's no two ways about that. Okay, so let's go back over. Okay, so this is part of the statement. The economic outlook has strengthened in recent months. They anticipate further gradual adjustments in the stance of monetary policy. The upward revision in their rate path suggests Fed officials are looking through soft first quarter economic reports and expect a lift this year and next from tax cuts passed by Congress in December. Financial conditions have tightened since late January as investors look for signs that the central banks might raise rates at a faster pace. This is their quote now. The job, let me put this up in a second. The job market remains strong, the economy continues to expand, and inflation appears to be moving toward the FOMC's 2% longer running goal, Powell said in a press conference. Powell said he's carefully considering expanding the number of such briefings where he explains Fed's decision, cautioning that he wanted to be sure that he didn't send any signals about the path of policy. Powell said the FOMC plans for gradual rate increases. While generally upbeat about the economy's prospect, he also said that the trade policy has been a concern for businesses. In the forecast, U.S. central bankers had projected a Fed funds rate of 2.9% at the end of 2019, implying 3 rate increases next year compared to 2 2019 moves seen in the last round of forecast. That wouldn't be bad. That's the real bottom. Yeah, I guess that's what the market's looking at. That really wouldn't be that bad. You know, 2019. Powell showed important signals of continuity with Yellen's Fed language, emphasizing further gradual adjustments to interest rates was retained from Yellen's final meeting. And the dot plot update remains centered on 3 hikes by year end, although the distribution shows federal officials flirting with the possibility of a 4th rate hike. The Powell Fed is proceeding in a similar sense of gradual deliberation. That's how the market's looking at it right now. Dow Industrials right now up 98, Nasdaq up 11, S&P's up 5.5. Come right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go inside the NDX 100 and see the strength versus the weakness inside the NDX. So, leader out here, you get Applied Materials up 2.9%. You get Liberty up 2.9%. INC-wise up 2.6%. Taken away from it, we have a Win down 2.8%. You have Liberty. That's interesting. Liberty has so many different equities. There's two of them that are up and one that's down. Illuminator's down 2.1 and Qualcomm's off 1.8. If we go over to Apple, Apple's taking a little hit out here. So Apple down $3.14. You do have an expansion of volume on the way down. Bottom line is that this high volume swing low is game again. You know, you have two separate high volume swing lows in the marketplace. The March 3rd one, second and third. Is one of them. Apple's taking that out today. We'll see whether we get the volume. Right now, it's going to need, we're at 29 million. It would need more than 38 million. It's taken out on price, that's for sure. So we'll see, you know, if, in fact, that continues lower with volume. Let's go over to the king, Amazon, see what Amazon's doing out here. Amazon right now, flat. Well, it's down $11. That might as well be flat, though. Google's also flat. Now, Google is right at the March 2nd swing area. The high of that is 1,081. We've hit 1,085 today. This looks like it's building cause to try to get into that level. That's the way that baby is shaking out. TWTR, let's take a look at Twitter. Twitter out here, this is setting up to go after its lower gap where it broke out from. You know, so Twitter had a really nice pop higher when it came out with numbers on the 8th or the 7th of February. That's when it went from 25.76 all the way up to 35. Yesterday, come down in spades, as did the rest of the social media companies, and that came barreling down there with volume. So I expect what you're going to see is that the 27.08 will get filled. That's where that gap is. If we go to Snapchat, that already got into the gap. The gap in Snapchat, that also came out with numbers. That traded up from $13.47 on February 6th. On the 7th, it was at $21. Big number. Took, you know, a month and a half to come back down, but you are already into the gap on Snapchat. So Snapchat is really dangerous to the point of that wants to come back to $14.20. Big number there. Let's go into Boeing and take a look at Boeing. So Boeing out here, folks. Yes. This is wherever this goes, the Dow goes. That's the bottom line because it's such a large weighting because Dow's a price-weighted index. Boeing right now is up $1.16. You get light volume. This already came down to the 5th, 317. Yeah, well, we got the 322. The high volume low out here is 317. And I expect you're going to see that get down to that level. What Boeing has done today, you're up with 2.9 million. You're going into, this is pretty intense. You're actually going into 13 million. This is pretty cool if you want to see how a setup comes in. So Boeing hit $341.91 today. The downdraft, the top of the bar is 340.52. You're not going to do the volume in the next 15 minutes. We'll find out if it can do the price. You know, that's a clear setup that you could basically say, well, we'll find out tomorrow if, in fact, it gives it up and starts heading back down to the 317. Because what we do have here is that you get 2 more days of trading before the week's over. This market tonight is going to digest exactly what the Fed said, and we'll see where that wants to go. If we do go overseas, what you're going to see, we've been talking about the FTSE 100 in the UK. Bottom line, couldn't hold price again today. This is under the February 6th trading. It's a big number. That number there is 7,079. You're at 7,038. What that does, folks, is it brings the probability higher that we, number one, are going to go down to that February swing low. And that February swing low, let's go take a look, because this is down there quite a bit from where we are right now. The cash S&P right now is at 2721. The 2 swing lows that we're talking about, the March 2nd swing low is 2647. That's the bottom of it. The February 9th is 2532. So you are talking some big numbers if, in fact, that's where we go. And that's where I expect we are going to go. Let's go take a look at the XLF, because inside the financials, guess what? If these rates are going to basically keep going up, they should be doing fine. Guess what? They're not. What you did out here in the XLF today, you're up 15 cents. You're doing 45 million. 45 million is coming into 57, coming into 147. That certainly doesn't look like it wants to continue to higher price. We go look at Goldman Sachs. Goldman Sachs, flat market out here today, up 52 cents. You've done 2 million shares. Bottom line, you're coming into 4.1. No buyers. Morgan Stanley, we go take a look at that. MS. Morgan Stanley looks better. This still, it's hanging at its highs. Morgan Stanley's a better setup. I still expect you're going to see lower price. Bank of America, BAC, flat market at its highs. BRK, Berkshire Hathaway continues to be the largest weighting still inside the XLF. Now, this is where this gets cool. So Berkshire Hathaway, folks, bottom line, is building cause to go downtown. We came down with 5.9 million. You're going up $1.40 today with 2.3. The high was 207.27, and right now you are trading at a price point of 206.15. You know, so the way that is laying out, that's also laying out that it very well could be a small ABC structure on the way down. Disney's up 87 cents. You have let's go to GE. So GE broke down again yesterday. Yeah, and here it is. This is pretty amazing. So we come down yesterday with 88 million. You're up 28 cents right now. You're at $13.92, and your volume's dying on the vine again. So that is also saying that that's building cause for lower price. And of course, in the GE's case, what has been sticking out there for a long period of time is that high of the low, which is 11.35, and that is just actually amazing. The next time that GE comes out with their numbers is going to be April 20th, and I expect what you're going to see more than likely in GE is that they're going to have to come out before that with a warning, and I suspect I don't see us going a full month without GE coming out with some other type of warning saying that they either found something else, that they have to write off more, what all that is. Because what you have is this. They've already got a letter from the SEC asking for certain documents. Once that starts, folks, the SEC, I suspect, is all over them right now, so they're going to be a lot more careful on what they publish, when they publish it. If they know they're going to be losing more money than the market thinks right now, it's going to be a material fact, and they're going to come out with it before the numbers come out. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome, folks. We have the Dow right now up 3. NASDAQ is down 12. S&Ps are off 4. And bottom line is that we go over to that gold contract, and what you're going to see is that you have it all, folks. You get the wide price spread, monster volume. You've done the 444,000. You know, and what you also have here is that the February 14th number is a big number to keep your head wrapped around. The reason being, that was the break top side where the market, gold market, was saying it wants to go to 1370. You had it all. You pulled all the way back. You did it with light volume. It was hold the bottom line. Holding price was the toughest part of this whole deal. It didn't get below the 1303, but man, it was teetering here the last 3 days. I mean, last Friday, Monday, and Tuesday. And now what you got it all. You get the wide price spread. You get the volume. Next, the leg up here would be 1370. Inside the gold and silver equities, what you do have is that you have a lot of ABC structures on the way up. They're taking B points out. They have the volume behind the move. That sets up that you're going to see quite a run. If we go over to the dollar index, it's just the it's confirming what the market, gold market is doing. You're down with 31,000. You almost got 32,000 contracts right now inside the dollar index. So what you're doing is that you're barreling into the lower end of the consolidation that we've been in since February 7th. So I expect what you're going to see out here tomorrow is going to go after the lowest swing point of 88,915. That being said, the bigger number is down here at the bottom of the consolidation, which was on February 16th, which is the 87,830 mark. And that is in the shorter aspect. The larger aspect is that the dollar index has been in and is confirmed ABC structure down with 82,340 handle. So that is a monster number. Stay right there, folks. We'll be coming back with more numbers after the close. Bottom line, huge price spread out here today in all the indices. Dow Industrials right now are down 11. NASDAQ is off 12. S&Ps are down 5.5. Going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday. Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Hope all you folks up in the New York, Boston area that get some warm weather, get rid of that snow quick. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We had the Dow Industrials that down 44, NASDAQ down 19, S&P's off 7. Big moves out here today, folks, monster moves. We go into the Dow first. What you're going to see from highs to lows, you had a 350-point move. We had a high out here of 24,977. Bottom line, you closed out at 24,682. Big numbers. And what it looks like, folks, is that we have a B to a C setup of an ABC structure on the way down. Volume-wise out here, what we did, you did 798 million. So the bottom line, that's how it's set up. Composite, same type of setup inside the composite. Composite couldn't get into the gap out here. Tried to get into the gap. The composite got up to a price point of 74.15. We end up closing at 73.45. Gave it up and gave it up in spades. NDX 100 did the same as the composite. NDX got up to a price point of 69.30. Ended up closing 80 points down to 68.53. And if we go take a look at the Qs for that correlation, what you'll see inside the correlation of the Qs, you did 42 million. You're going into 71 million. Didn't hold price. The Qs are setting up to get down into the March 2nd area, which is 161 right now. You're at 166.92. We look at the small caps. Small caps did the same type of setup. The difference being is that the small caps are basically taking a lead now. You know, this wasn't a bad deal what the small caps actually did. We got to a price point of 158.26 on the IWM. You did 22 million shares, which is not bad. So the small caps, bottom line right now, I'm not saying that that's going to get down into that March 2nd area just yet. I do expect we'll see it, but guess what? Not right now. The SPY, we take a look at the SPY, what you have with the SPY. That was a total give up. You got to a price point of 273.27. You closed at 270. You did volume of 74 million versus 109. That's setting up that wants to get out of 264.82. That's 6 points from where we are. The GDX, gold, silver caught a big bid, as did many of the commodities. Monster volume came in the GDX, 76 million shares. That's what we needed. Has it in spades. Closed up 59 cents. That's saying the GDX number one wants to go to 23.15. And we'll see what kind of juice we get when we get to that level. Bottom line, gold contract also got big juice behind the move out here today. Gold contract up 21 bucks. You've done 451,000 contracts. Gold's on making its way up to this 1370 again. And how we get there is going to be important because that's where we've been trying to break out of for a long period of time. When we do take a look at the aspect of this retracement, this is where this also gets really cool too, is that this very well could be a very large ABC structure on the way up, folks. And if that's what we get, you're talking about approximately $118 A to B, which would end up getting you 1421 would be the ABC structure on the way up. Good number. Huge number, actually. We take a look at the rest of some of the other commodities out here. You had unleaded gas up 3%. That's trading at $2. Yeah, $2 a gallon right now. You get crude oil up 2.9%. Silver was up 2.4%. Gasoline was up 2.4%. Cocoa was up 1.7%. Gold 1.6%. Copper 1.8%. Good numbers right across all those markets. Now, notes and bonds, pretty amazing. So, you know, note and bond market looked at what the Fed said. Bottom line, they liked what the Fed said. 119.22. Rejects lower price. Had lighter volume. This 10-year wants to run up to the 122.02. And I can tell you, my take is that that's where we're going anyway. But that is a shocker in the aspect of what the Fed is actually saying. And, you know, bottom line, we're at 2.883. The high for the year is 2.950. This one's higher price, lower yield. So you can see that, well, let's go over to King Dollar, actually. So King Dollar also went south, had the volume behind the move, monster volume too. As this thing went south, what you got, 724 ticks, 32,000 contracts. This is making a way down into this 88,915, and, you know, bottom line, we'll see how it handles that particular price. But it looks like, number one, it wants to get there. Number two, we'll see whether it's going to blow it away. Some of the higher volume stocks out here, and we were in a low volume market that gave it up on price. You had Facebook up $1.24, GE was up 24 cents, Ford was up 11, Apple took a hit. Apple was down 397 with an expansion of volume. General Mills was down 9%, down $4.42, trading at 45.51. And this is really a disaster. I guess we're not eating all those cereals anymore. Thank God. You know, that This stock just went from $60 in December to $45. We pull this back. This has been a mess for a long period of time, actually, because it was 72 in 2016. Oh, look at this. This is a monster ABC down. It's confirmed ABC down. So, ooh, this is a big one. So the A point is approximately $73.50. You're talking about $23 A to B. That gives you $38. $38 a confirmed ABC structure on the way down. We just blew apart. We're not even at the end of the month, and we've already blew this apart. The B point was 79 million. We've already done 98 million. So bottom line is that that's some problems. Let's see what they have to say here. Okay, so number-wise was this, is that they had earnings per share. The estimate was 78 cents. They made 79. Not bad. Revenue, $3.87 billion. They made 3.88. Whatever is in here, guess what? Market's not believing it. That's the real bottom line. Stay right there, folks. Be coming right back. We have the Dow Industrials finished down 44. NASDAQ off 19. S&P's off 5.5. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, Facebook, no doubt, has been sold down pretty good the last couple of days. Today, it's up $1.24. Zuckerberg is out now, and we'll see what the company's going to do versus what they're going to say. So this is just running across the tape right now. So he said the company's will do three things: investigate all large apps that were allowed to get data not just on their users but on those users' friends before Facebook changed this policy in 2014, and ban any developer that don't agree to an audit. The company will tell affected users if they find problems. Good luck with that one, right? Remove developer access to data if someone hasn't used that app in 3 months, and reduce the type of information that the app gets when the users sign in. Work to make sure people understand who has access to their data, showing everyone a tool at the top of the news feed in the next month, and making it easy to revoke permissions. I know it takes longer to fix all these issues than we'd like, but I promise we'll work through them. We'll work through this and build a better service over the long term, Zuckerberg said. Bottom line, folks, they knew what they were doing out here, and this bottom line doesn't say much at all. What's intriguing, so check this out. Let me pull this up, because this was this is how intense this was. Let me pull this up, because I didn't get to read all of this. But what you had is that the guy that actually sold Facebook WhatsApp, okay, came out and basically took a swing at Zuckerberg and Facebook in a big way, meaning saying specifically they knew exactly what they were doing, how they were doing it, and you know, that is going to come back and haunt them, I suspect, in a large way. You know, because what you do have, you know, in the morning show yesterday, Tommy was going through what exactly they did, and he had Facebook up, and he was going through the settings, and they had this. You could think that you were doing privacy settings inside the settings page, but what ended up happening is that they had another tree that was out there inside the apps page that, if in fact, now anyone could have done it, that's the bottom line, any app developer could have done it, turned around, do an app, and as they're doing the app, bottom line, get all your friends' information, and that's the big number here. Let's go to a John in New York. Hey, John, what's going on?
Hey, Tom.
How you doing?
Okay.
You get some snow up there?
At Traders Expo, remember?
Oh, sure, man, totally.
I'm going to Italy Monday.
Oh, that's awesome, man. You are gonna have such a blast, and you're going for a couple months, right?
2 months, yeah.
Oh my God, that's as good as it gets, John. That's as good as it gets. Hey, you know what? I just in this week's Bloomberg, they just had an article. I just read it too. In southern Italy, right? It was in the food section, and there's three small towns, and folks, you should see like the pizzas they make there. Like, oh, it was a great article. It was a great food article. I'm starving right now. I want a pizza right now. You're gonna have a blast, man. It's
probably Calabria or.
It was Calabria. It was Calabria, yeah. And then another little town. And you know, if you've never been to Italy, folks, what is always impressive to me, in the article, John, right? Evidently, I don't think this writer has been there before, because he was like in shock that like a little bakery had such equipment that was so state-of-the-art in this little town. And guess what, folks? They not only have equipment that is phenomenal, they're phenomenal cooks, but I've seen some of the best restaurant equipment in little tiny places in Italy, in little villages. Do you know what I mean? It's like, that's how it works, right? I mean, it's you know, it's pretty wild, man.
You know, the Calabria is one of the poorest parts of Italy, by the way.
Yeah, that's what they were saying in the article. That and they were showing that they were showing the different types of pizza, and they were showing when they eat it, how they eat it. You know what I mean? And that, you know, these pizzas that they're talking about in this article, folks, aren't like the pizzas that we are used to. Okay, they were different, but they were all well, it was 20 different types that they had 2 or 3 paragraphs about each one of them. And
did they call it focaccia?
One of them was focaccia. Another one, there was a lot of them that were like little, so you get the big pizza, and then it'd have little round balls in between it. And, you know, as you said, they were poor communities, and so what was going on is that they'd, you know, give their kids this for lunch. When people are working, they'd grab it so that, you know, you could eat it, you'd be eating it cold. It's a pretty cool article, man, you know, as to what it's all about. So, well, you're going to have a blast, man. You're going to bring us to Italy. Well, you got to turn some folks onto us over in Italy. Not,
I'll try.
So what are we going to look at today?
IVOG. It's a Vanguard S&P 400 growth ETF.
Okay, I have it.
I want to buy it. I want to put it in. Well, do you think it's going to revisit the February 9th lows?
Let's take a look at it. I suspect, yeah, my take is the whole market is going to. You know, this rejected higher price today. Yeah. Yeah. You know, so here, let me see what's. So this is the S&P 400, right? Okay, so mid caps. Yeah, you know, I mean, if you're going to buy this thing, you know, you know what the danger part is, John. Particularly, you know, you could always put the bid in and say, okay, listen, that low is 125.85. You could scale into it. Do you know what I mean? You know, if you.
Well, I'm going to put it in a good to cancel order because I won't be able to do anything from there.
No, I'm with you. No, yeah, that's cool. Yeah, I can see that.
126, you think it's a buy?
You know what the problem is that the way that I look at markets, that's a high volume high. To me, it wants to get tested. If you come down there with volume, then you get a problem. Do you know what I'm saying? You know, because, you know, then it can blow it away. You know the way I do it is that you're going to be gone for a couple of months. I don't think there's anything wrong with putting it in, because what happens is that that's so far down, you know, where we are right now. You're not just going to go down there and blow it away the first time. That'll take way too much energy, you know. Expect, you know, it could take this looks like it could take, you know, good 5, 6, 7 weeks to get down there, number one. And then hopefully by then you can basically take a look at it.
Right.
But you're a lot better off putting it.
I'll be away 8 weeks, so we'll see.
Yeah.
Maybe by then it'll be a buying opportunity.
Yeah, totally, man. So where are you going? You told me.
You ever hear of Monte Cassino?
I have. And
it's between Naples and Rome.
Oh, nice. Nice.
I have a house there, and we're fixing it up. So.
That's so much. And is your friend going with you too? The guy I met with you?
No.
No.
Oh, he's over here.
Oh,
he doesn't have many relatives left over there. I have a lot of relatives, so.
Oh, that is so cool. That's awesome, man. Well, listen, you have a great trip, a safe trip. All the tigers and tigresses are jealous out here, no doubt. I'm telling you, man. Oh my God.
Can I hold on? I have another question.
Oh, absolutely. Stay right there. You stay right there, folks. John and I are coming right back. We have the Dow down 44, NASDAQ off 19, S&P's up 5.5. We're coming right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're talking with our man John from New York, and we are talking. He's going to Italy. That's a beautiful thing. I just got I get a map up of Italy now too. You're gonna drive me crazy, man. Okay, so look at that, man. Oh my God. So between Naples and Rome, okay, right in there. I got it.
Casino is the nearest city there.
Okay. Wow. Cool, man.
But don't worry, I'm not going to Positano.
Oh,
so I'm not going to buy a whole store of ceramics over there.
Yeah, exactly. That's what I did once, folks. I still, I was looking at I did that like 20 years ago, and I still have so much of it. It's insane. They last forever, man. They totally last forever. So, what else are we going to look at?
VDE, Vanguard Energy. I just sold it today, and at what price would you buy it back?
Okay, so let's see. The fund seeks performance of the U.S. Investable Market Energy Index. I'm curious as to what.
It's got Exxon, all the biggies.
Okay.
Like Chevron.
Okay. Exxon. Oh, yeah, this is like the XLE then. Okay, yeah, it is. Because the XLE, Chevron is 14%, Exxon's 21%. Okay, so this, first I'm going to go right to the XLE, because we're talking about the same weighting structures. So you got to pop in it today. You're 16 million shares, but that being said, this hasn't operated, which is just pretty amazing, actually, when oil is laying out at $65 right now. What I would do, okay, so the high of the low is $60 here. That's going to be January. Can you just give me that symbol again, John?
VDE.
Okay. So I want to look at what the high of the low is here with this one. So you're at 94.08. Put this on. Okay, so this would be, that correlates to 83 on this.
83?
Yeah. And you can see it's pretty, that's interesting. The 107 has volume the last time it went up to that swing point. Yeah. So.
Don't tell me it's going back to 107.
No, well, I know what you're saying. What you have here is that, See, the 107, in January, January had 7.9 million. You were going into 5.8, but you didn't make the swing point. 109, which, that's a toss-up there. But your larger picture would be this high volume low. So I mean, if you're going to put a bid in on that, I'd put a bid in like 84 bucks. It's 83.75. That's the number there. Do you know what I'm saying?
Mm-hmm.
If you're going to do the same thing, yeah, that's where I'd put that baby.
All right, thank you.
Awesome, man. Well, listen, you have a great one, a safe one, and have a blast. Hope you're. So, how much? You got a lot of work on your house? That'll be fun, huh?
Yeah. Well, I have this kid that does the work on the side, and he's very good.
Yeah.
And last fall, I was over there. I made 300 liters of Montepulciano wine, so I'm going to see how it is this spring.
Oh, cool. You know what's amazing? The wine over there is 10 times better than any of the wine that you even have here, and I'm just talking about even table wine. It's like, how does that work? Do you know what I'm saying?
The grapes are very good quality.
Yeah. And the lemons and the lemons and the olives are insane, right?
Yeah.
Yeah. It's if you've never been
like giant lemons, yeah.
Yes, huge. And everywhere you go, folks, you get olives, and they're amazing, man. I mean, it's
you know why? They're grown in volcanic soil.
Okay.
And it's very rich in minerals, right?
And that's it, huh? That's interesting.
Yeah, it's very fertile soil. Anything you plant there, it grows good.
And if you haven't seen it, like the pots that I have seen is Positano and that Amalfi Coast and all that. And what I love is that how everything is hills, and the way they grow is that they grow on levels on the way up. That is so cool, man. Right? Is that how a lot of it is?
Yeah. That's good for growing grapes, by the way.
Okay.
Because they have good drainage.
Yep.
Olives too. Olives thrive in that type of soil, yeah.
Yeah. Bruno Monta, you get people in the Tiger's Den going crazy too. We're going to be breaking out some good Italian wine and some pizza. Oh my God.
Buy good Montepulciano here too, though.
Oh, I bet, no doubt. Okay, brother. It's always a pleasure, man. Have a great one. Have a safe one. And I look forward to talking to you again.
Thank you.
Thanks, man. Bye-bye.
Bye.
So, the market out here, folks, is really intriguing in the aspect that we have an ABC structure on the way down. That's why this market seems to be setting up. The market today tried to get into the downdraft from Monday, couldn't handle it, had lighter volume. This sets up the next leg down into the March swing areas. That's how this is straightened out. If we go, I want to go over to the XAU and the HUI. They both caught a good bid out here today. XAU's up $2.47. Now, the XAU hasn't been a problem. The Gold Bugs Index has. And I believe that what we saw out here is that we finally got back inside the range again. And this is a big one. 174.19 is the number. What we did is that we got to close at 174.49. It was up $5. And I will get the volume here tonight, and I'm expecting that we're going to have the volume. The reason being is that if we go over to the GDX, you're going to see the monster volume that came in. We did 76 million shares. And what does happen inside the GDX is that we had volume all day long, but on the close, in order to keep the net asset value of the GDX where the sponsor of the ETF, the GDX, has to be, they came in at the close and they bought 17.7 million shares. Big number. The GDX out here had the price spread. I expect what you're going to see, it was up 59 cents. Now the GDX is going to be running up to this 23.15 area. So decent number. No two ways about that as how we went topside. The silver, SLV, let's go take a look at the SLV. This also caught a nice bid. Yeah, big number. The SLV, which is the iShare for the silver contract, up 37 cents, $15.65, monster volume, 12 million shares. What's cool here now is that, silver bottom line had got, I believe, almost below. It's up 2.47% today. Yeah, it did. Silver had got below the swing point of March 1st. That was 16.16, and now it closed at 16.18 yesterday. This is how deviant the silver market was. Now, it did have lighter volume, but the bottom line is that, you know, the longer that you teetered down at those lows, the higher the probability was that you're going to stay at them. So watch what this did. Yesterday, you had 69,000 contracts. You were going into 100,000. It did reject lower price, had lighter volume, laid there, though. Today, confirmation. Up with 107,000 contracts. Silver is going to be making its way up to this $17.28 area. You stay right there, folks. We'll be coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. I do want to thank Paul, Tiger in the Tiger's Den. When we're talking about General Mills, evidently, you know, the numbers didn't look bad. Bottom line is that inside General Mills, the report was talking about that their food and their shipping costs was increasing. So bottom line is that, you know, that is going to take the margins down a bit. If we do look at the aspect of what kind of gross they've been doing, that has also been coming down, which is pretty wild. 17.9 billion they took in a gross revenue in 2014. This year, 15.7. You know, so bottom line is that in this quarter, 3.9. They made what they were supposed to make, but you can see that aspect of how they're going downtown. Their actually 3-year growth rate is down 4.3%. In the United States, it's down 4.6% in the world. So big numbers here. Let's go take a look at Five Below. Five Below closed at $67.14. That's trading $67.75. What they have to say number-wise goes like this. The estimate was $1.17. They made $1.21. Same-store sales, they expected a 6% plus. They got a 5.9. That's not bad. They did miss the range. Their range had been $2.13 to $2.58. Now they're basically saying $2.36 to $2.42. So they brought the higher end down. If we take a look at this right now, you're trading up about 50 cents. And that's going to have a hard time getting into the downdraft from January 9th. This has been laying at the same place. In fact, if you look at this on a chart, what this is saying is actually going to trade lower because it was hammering downtown all day long with volume. We went from $70 to $66.96, and you did have volume behind that move. So that's saying it wants lower price. Let's go over to Guess. Guess closed at $15.52. That was up 54 cents. Now it's trading up $17. No, it's trading up $17. It's trading up by $1.50. This is coming into a vicious downdraft from the January 30th time frame. You went from $19. 5 days later, you're down at $14. Numbers-wise, it looks like they're going to have some good numbers, though, more than likely. So let's see what they have to say. They reported, let's see, fourth quarter. The estimate was 54 cents. They made 62. That's an adjusted earnings estimate, too, by the way, because they're actually losing money. Oh, no, that was fourth quarter. They see a loss of 24 cents to 27 cents in the fourth quarter. Big numbers. They're blaming that on the tax law changes. So what happens in these write-downs, folks, is that these companies would have tax credits because they had lost so much money, and because of the tax reduction, those credits aren't worth as much in the future as they had been. Because the bottom line is that as the percentage of taxes, meaning dollar percentage that we have to pay on our taxes, when you have tax write-offs and you're paying heavier taxes, those credits are actually worth more money. And in this case, that's why you're seeing so many of these companies have to write down the aspect of what they've had on the books. And so that's an asset. The thing that's pretty wild about this is that that is an actually asset on your balance sheet that ends up having your balance sheet worth less money also, meaning the company in general. Herman Miller. Herman Miller closed at $37.32. That's still trading at the same area. This company here, now this is, I think this is the company that, yeah, Office Interiors. They make some beautiful chairs, expensive chairs, no doubt about that. So let's see what they have to say. Herman Miller, they missed guidance and they lowered, they missed actually the lowest analyst estimate. So let's see what they have to say here. The estimate had been 70 cents. They're looking at 56 to 60. The revenue estimate had been 612 million. Now they're looking at 590 to 610. The adjusted third quarter estimate was 49 cents. They think they're going to do 50. Bottom line is that they got, let me see what this chart looks like. Now this is really intriguing that, you know, this company's not doing really well, because when you look at corporate America, bottom line is that companies are making money, but evidently they're not buying furniture when they're making money. You know, so what you do have is that the low of 2009, no, that was $7.94. you're back up to the highs of 2007. Let's see, 8.5 million. This is close. So in the month of January, we did 7.5 million. We're coming into the swing high of 2007 with 8.5. This looks like it's going to build cause, though. This looks like it's going to build cause to try to get up and over that level. I wouldn't be buying that right here. But the way that is set up is that's how it does look like it is going to be building cause to get up and over that whole level. Google. Let's see what Google's having to say about blockchain. Google is working on blockchain-related technology to support its cloud business and head off competition from emerging startups that use the heavily hyped technology to operate online in new ways. Companies use blockchain and other so-called digital ledgers to secure record transactions and process other data over the internet. The Alphabet unit is developing its own distributed digital ledger that third parties can use to post and verify transactions. One of the people said, although the timing of any product release is unclear, the company plans to offer this type of, to differentiate its cloud service from the rivals. The internet giant has also been acquiring and investing in startups with digital ledger expertise. Many of the deals haven't been announced, the person said. Still, Alphabet was the leading corporate investor in the field last year, ahead of Goldman Sachs, Citigroup, according to CB Insights. Several people in Google's infrastructure group, which reports to cloud chief Diane Green, have been tinkering with blockchain protocols in recent months, according to another person familiar. Google Insider said recently that the cloud business is a natural place for blockchain-related technology. In 2016, Google started a trial for developers testing blockchain services on its cloud. The company is now exploring much more expansive ways to deploy this technology. Digital ledgers like blockchain power Bitcoin and other cryptocurrencies. The technology presents challenges and opportunities for Google. Distributed networks of computers that run digital ledgers can eliminate risks that come with information held centrally by a single company. While Google's security is strong, it's one of the largest holders of information in the world. The company is, to build this ledger, Google has looked at technology from Hyperledger Consortium, but it could opt out for another type that may be easy to scale to run millions of transactions. Anytime there's a paradigm shift like this, there's an opportunity for new giants to emerge. Yeah, that's what I'm sure they're worrying about. There's no doubt. If, in fact, this is going to be at some type, well, it's a ledger technology. That's the bottom line. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Tesla's up by 598 today. Bottom line, folks, you got 2 high-volume swing lows here at 292. Now, the news on Tesla, this is pretty intense. The shareholders today, bottom line, said yes to Elon Musk new contract, a 10-year contract, $2.6 billion, okay? That's the number. Now, the number is predicated on him actually making so many goals. Well, not that number, okay? So watch how this shakes out. This is pretty intense. 2.6 billion, not million, billion, okay? 10-year deal. Now, here's how the numbers shake out, and this is pretty intense because if these numbers actually do shake out, they're projected, and this was in the filing, that he could actually get $50 billion if all these goals are achieved. And what the goals are predicated on, the goals are predicated on the aspect of him reaching certain levels at certain times, and each time that happens, he gets 1/12 of the amount of options that would be in there. And if that's the case, so let's look at this quickly, because if that's the case, right now, that would also be saying right now Tesla's market cap is $53 billion. If he got the $50 billion, Tesla would have to become worth $650 billion, more than Facebook, and produce more revenue than Procter & Gamble. So bottom line is that. You know, not a bad deal in the aspect of, you know, you're employed for 10 years, and not that Elon Musk needs it, but guess what? He wouldn't be around looking for that number, you know, and the way that Tesla's trading 386, you know, first off, it looks like 292 is going to be the goal out here, so pretty wild. Tonight, what you're going to be looking for, folks, expect what you're going to see. You're going to see a little pressure inside the futures market as this market digests the Federal Reserve. Always remember, folks, whatever you think about, you bring about. Whatever you're focused on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.